60% tax relief on your pension contributions. Is that really possible? I hear you ask. Well, the answer is yes, for a relatively small number of people with adjusted net income of between £100,000 and £125,140. Allow me to explain. Adjusted net income is your total taxable income before any personal allowances and net of certain tax reliefs. These tax reliefs include trading losses, charitable donations made through gift aid, pension contributions paid gross, in other words, before tax relief, and pension contributions where your pension provider has already given you tax relief at the basic rate. Making additional pension contributions as you approach the end of the tax year, when you may have more clarity about your exact income, can be a great way to maximize the use of income tax allowances and exemptions. Even better, if you know what your adjusted net income is going to be at the start of the tax year on the 6th of April, you can plan ahead and take advantage of this legitimate tax break. The reason some people are able to get 60% tax relief on their pension contributions is the reduction in the personal allowance that is made once your adjusted net income exceeds £100,000. Each of us has a personal allowance of £12,570 per tax year. This is the amount that you can earn without paying income tax. The personal allowance is frozen at that level until April 2026. For every £2 that your adjusted net income exceeds £100,000, your personal allowance is reduced by £1. And with the personal allowance currently at £12,570, that means the full personal allowance will have been completely wiped out when your income reaches £125,140. In other words, all of your income is subject to income tax. Anything you can do to reduce your income, so that's your personal allowance, is not reduced in whole or in part, for example, by making a pension contribution, will in effect generate 60% tax relief. But why 60%? Firstly, your pension contribution will generate 40% tax relief, simply because income at that level is subject to tax at 40%. So your contributions receive 40% tax relief. But in addition, your contribution will reduce your adjusted net income and you will recover your personal allowance, effectively giving you a further 20% tax relief. Let's look at an example of someone earning the top end of that income bracket, £125,140 gross a year. At this level, you have lost your personal allowance, so cannot earn any money free from income tax. You will pay basic rate income tax of 20% on £37,000 of your salary, which equates to £7,540, then 40% on the rest of your salary. So that's another £34,976. The total income tax paid is £42,516. Now, let's assume you make a gross pension contribution of £25,140, which will reduce your gross salary back down to £100,000. You then get back your personal allowance, so you can earn £12,570 free of income tax. You still pay basic rate tax of 20% on the £37,700, the same figure of £7,540, but you then pay 40% income tax on a much smaller amount of your gross salary, £49,740, instead of £87,440. This gives a total income tax bill of £27,432. Let's look at how we get to the 60% tax relief. Without making a pension contribution, you pay £42,516 in income tax. Making a pension contribution reduces your tax bill to £27,432. That's a reduction of £15,084 in the income tax paid, which, as a percentage of your pension contribution, is 60%. That's how to get up to 60% tax relief on your pension contributions if your adjusted net income is between £100,000 and £125,140. Thanks so much for checking out my YouTube channel. I'm Justin King. I'm a chartered and certified financial planner, and my aim is to help people live successful lives. That often involves understanding your money. I really do hope you've enjoyed this video. If you have, please press the like button to help more people like you find my channel. And for now, I'm Justin King, helping you live your best life.